Hey, it's Eric with The Future Mill. I want to talk about Roth and traditional IRAs. There are a lot of similarities, there are a lot of differences, and there's also a lot of nitty-gritty details that the IRS puts into place that are rules on these accounts that if you don't abide by, it could cost you major money. So let's do this. All right, so you've got your Roth and you have your traditional IRA. Let's go over a little bit of the basics first. We'll nail that down, then we'll jump into the actual IRS regulations to make sure that you are compliant with what you are doing. So with a Roth and a traditional IRA, one of the biggest mistakes that I see people make is they say, okay, I want to invest in the Roth IRA. And I say, great, well, let's get it started. We'll open the account and then we'll pick what investments you want. They think that the Roth IRA is actually an investment. It is not. A Roth IRA is nothing more than a title, and a traditional IRA is nothing more than a title. It's kind of like having an Apple iPhone. The Apple iPhone is the name, but then you have different apps that are actually on the phone, and that is like mutual funds, bonds, ETFs, all of these things that are in the Roth and traditional IRA. So make sure that when you're talking to somebody, if you want to open an IRA, this is just a title, then you're going to have mutual funds, bonds, stocks, ETFs, anything of that nature that you can actually invest in, that is what is actually kind of like the apps on the iPhone. Remember, this is just like the name, the iPhone, Apple iPhone. This is what's operating it. Now let's look at the Roth and the traditional and the similarities and the differences. The biggest thing is for 2019, 2020, you can put in $6,000 into your Roth or $6,000 into your traditional. You can't do both. But what you can do is split it up. So say you had $3,000 here and you put $3,000 here. You can do that, or you can just put $6,000 total in one or the other. Now that's for anybody under the age of 50. If you are over 50 years old, you can actually put up to $7,000 in a Roth or in a traditional, or you split it in half. That's $3,500, $3,500. You can do each of those. Now what I want to show you with the Roth and the traditional is the fact that you have $100,000 that you made. Well, if you have a Roth IRA, you put $6,000 in the Roth IRA, you are still going to show taxable income of $100,000. The way the Roth IRA works is you're going to put the $6,000 in after taxes into the Roth IRA. So your taxable income stays the same. But the nice thing about it is though this Roth IRA is $6,000 today, say it grows to be $10,000, this $10,000 at 59.5 is tax-free. That's the advantage of the Roth IRA, and that's why you hear a lot of people saying, do the Roth IRA, because it's tax-free on all of the growth. Now the traditional IRA, say you made that same $100,000, if you were to invest $6,000 in your traditional IRA, your taxable income drops to $94,000. So you don't pay taxes on $6,000, you're deferring the taxes. Now anything that grows, say the $6,000, grows to $10,000 just as we had in the Roth IRA. If this happens, you pay taxes on the full $10,000 when you pull that money out, which should be after 59.5. Now there's some tricks and tips with this because the issue is if you have a 401k plan, you may not actually even be able to defer any of this $6,000, or if you make too much money in the Roth IRA, you actually can't even do the $6,000 in the Roth. So let's take a look at what the IRS says about each of these. I'm going to pull up IRS.gov. It's a great resource, and I'll share my screen and we'll go through it. For a traditional and a Roth IRA, who can contribute? Anybody can contribute as long as you show taxable income or taxable compensation. This means if you make $6,000, you can put $6,000 away, but if you only make $4,000, you can only put $4,000 into the traditional or the Roth. Now the Roth is a bit confusing, and I'm only going to show you 2020 because that's the year we're in currently, but if you make over a certain amount of money, you are unable to do the Roth IRA. Now I know somebody out there is going to say, well, you can actually do a Roth IRA, it's called a backdoor Roth. I get that, I'll explain it in another video, but we're just covering the basics here. So if you make over $196,000, that's kind of the starting point. There is a phase out period here between $196,000 and $206,000, but the basis is if you make over $196,000 and you're married filing jointly, you cannot contribute to a Roth IRA. For the single person, same concept, but if you go down here, 124,000 is where it starts. If you make over 124,000, you probably can't do the Roth IRA. Now let's go back and you say, are my contributions deductible? You can deduct your contributions if you qualify with a traditional IRA. With a Roth IRA, your contributions aren't deductible. Remember, the Roth IRA is after tax. That's why it's not deductible. But with the traditional IRA, you would think you could, but if you have an employer retirement plan, again, it's kind of like the Roth, you have phase-out periods. If you make too much money, you can't deduct it, but you still can contribute to a traditional IRA. I know it's a bit confusing. If you make over $65,000, there's a phase-out period, and then if you make over $75,000 and you are single, you can't deduct a traditional IRA from your taxes if you are participating in an employer retirement plan. For a married, filing jointly, or qualifying widower, it's $104,000 phase-out period, and the top number is $124,000 or more that you can't deduct your traditional IRA contributions if, again, you are participating in an employer plan. How much can you contribute? I went over this for 2019, $6,000, 2020, $6,000, and if you're 50 or older, you can put up to $7,000 in your account. What is the deadline to make contributions? It's April 15th, 2020, the same as your taxes. When can you withdraw the money? You can withdraw it at any time. This is a bit misleading. I'll get into it in a minute. Do you have to take required minimum distributions? So you must start taking distributions by April 1st following the year in which you turn 72, 70 and a half if you reach the age 70 and a half before January 1st, 2020, and by December 31st of later years. So it's a bit confusing on this, but basically what has happened is the Secure Act was just passed, and so now if you weren't 70 and a half by January 1st, 2020, then you're able to delay your required minimum distributions to age 72. Often, people will start them when they retire anyway, so it's not a big deal, but if you are wanting to delay them, you can delay them till then. Now, for a Roth IRA, for the owner, you don't have to take required minimum distributions. This is a nice thing because you can let the money grow as long as you want, and the government doesn't say, hey, you have to pull out some of this money. Are my withdrawals and distributions taxable? Any money that is in a traditional IRA is taxable. If you are wanting to pull it before age 59 and a half, you may have to pay a 10% penalty. There are exceptions for this, but that's where I want to take you to where it says, when can I withdraw my money? And you can draw it anytime. Don't do that. Oftentimes there is a penalty that would occur. So what you're going to do is if you pulled out your traditional IRA money and you're under age 59 and a half, you could have a 10% penalty, and it would also be taxed at your ordinary income tax. With a Roth IRA, it's nice because you've already paid taxes on the money. If you want the money you've paid taxes on, you can get it at any time. The growth on that money is what you have to wait until 59 and a half for. Now again, there are exceptions here, but again, leave it because it's for retirement. That's a ton of information about traditional and Roth IRAs. If you have any questions or if you want to open up an account, feel free to reach out to us at thefuturemill.com. You can book a call and we'll be happy to help you with that. If you have specific questions regarding taxes, we are financial advisors, we are not tax professionals. We legally can't give tax advice, so reach out to your local CPA. And also, if you have not yet, please like and subscribe. And as always, thank you for watching.